from one Mag 7 to another. We've got Nvidia in focus this morning. Shares under some pressure in the pre-market. What's going on here, KG?
Yeah, you're seeing the shares down about 4.6%. I mean, the broader equity market itself, if you're just looking at the futures, are seeing a little bit of pressure. I think there's also maybe some selling activity taking place because of potential tariffs or adjustments of tariffs for Japan, and also maybe some retaliatory tariffs and as well as additional sanctions and things of that nature, potentially going to China, which Nvidia is going to obviously have a little bit of an impact there. So you are seeing the shares to the downside. We did see that CoreWeave IPO. You know, the market's calling it a disappointment, but it did close higher than where it opened on Friday. But obviously, we did not see a massive run up to the upside when it came to CoreWeave, and Nvidia has a fair amount of exposure there. They actually did buy around $250 million worth of shares on the day of the IPO. So you are seeing CoreWeave down in pre-market as well as Nvidia. And once again, this is just a degrossing situation across the board when it comes to equities. And some of these companies that have had some pretty decent valuations and a really decent run might be the ones that get sold first for a lot of investors that are looking for to take profits as well as maybe to reduce some exposure.
Yeah, it's interesting to see, like, to your point about CoreWeave. I think part of it is the overall expectation for the IPO market this year so far hasn't materialized yet, because there was this expectation we'd see a massive growth story here, and with the risk-off sentiment we've been having, it's not helpful obviously to these new companies debuting. When you look at Nvidia and how it's performed year to date, what do the technical levels tell you?
Well, I mean, right now we are testing around that 105 level. That's going to be key for us to be able to hold. In fact, if you kind of look at Nvidia over the last year or so, and you bring up a weekly chart, it has been in its own little flag pattern. And right now, that neckline, the first area of support, you're looking at between 105 and 95. And so we break below 95. That's where you start talking about potentially $75 being on the radar here. But once again, this stock has kind of plateaued over the last couple of months here, and we are seeing that pullback, and maybe some buyers actually step in. Last time that it got to around 104, we did see some buyers kind of stepping in here. So let's see if that's going to take place this time. But the technicals don't look that great. But if you kind of look at the longer term chart, the 3-year weekly chart, it's still in its uptrend, even though the daily chart kind of shows that we might be breaking down here a little bit more over the next couple of trading sessions.
Following U.S. President Donald Trump's announcement that he would not be giving any nations preferential treatment with regard to reciprocal tariffs, Nvidia's shares dropped more than 4% in the early hours of Monday. Speaking on board Air Force One on Sunday, Trump said that reciprocal tariffs that will be imposed on April 2nd, dubbed Liberation Day, would apply to all nations, shattering investor expectations that his trade policy initiatives would be less harsh and escalating concerns about the recession. With U.S. IT stocks leading the way lower and Tesla shares down more than 5%, Trump's most recent remarks sparked a sell-off throughout markets, escalating losses among the Magnificent Seven tech stocks. With the United States preparing to implement reciprocal tariffs and 25% taxes on exports from Canada and Mexico, Nvidia was already expected to be impacted by Trump's tariffs this week. AI servers, many of which are brought from Mexico to the U.S., use Nvidia GPUs. According to U.S. trade data, in 2024, the U.S. imported $43 billion worth of computers from Mexico, which includes data center servers. The market for those goods and, consequently, Nvidia's AI chips may be impacted by higher server prices. Nvidia may be further impacted by more broad reciprocal duties, particularly if they target Taiwan. Some $33 billion worth of computer parts, including printed circuit boards with Nvidia's GPUs, were imported from Taiwan in 2024, according to trade data compiled by supply chain analyst and Michigan State University professor Jason Miller. The top AI chip contract manufacturer, TSMC, which makes Nvidia processors, is based in Taiwan. Though it's unclear what such penalties might entail, Trump has also stated that he may eventually put an import tax on chips made abroad. Nvidia has hinted that tariffs might have some effect on the company. During its annual GTC conference, CEO Jensen Huang informed analysts over the phone that tariffs would have a minor short-term impact on the company. Huang cited TSMC's recent $100 billion investment to increase its American chip manufacturing footprint as evidence that the business is planning to manufacture onshore in the U.S. in the long run. As investors evaluate the high valuations of businesses in the AI field and prepare for trade battles, Nvidia's stock has been slammed in 2025, down about 22% year-to-date as of Monday morning. Analysts had indicated that the U.S. president's tariffs were not completely priced in the markets prior to Trump's remarks on Sunday, according to a report. Henrietta Trees, head of economic policy at Veda Partners, warned that the market will have a lot to process. Additionally, they will observe the long-term and forward-looking nature of these levies, which are not yet factored in. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Management, take a look right now. We're looking at Nvidia, by the way, down about 4%. But you look at what happened with CoreWeave on Friday, and it says what to you, Paul?
Well, obviously, at least in the near term, the bloom is somewhat off the AI rose. But I will tell you that although I have a big cash board right now, I am trying to focus on AI infrastructure trades for the rebound, which I think, I don't want to say it's inevitable anytime soon, but these stocks will come back, at least a select group. So the CoreWeave IPO was pretty sad. I was actually a private investor in the company, and now I'm slightly underwater. But I think once the company starts reporting their results, we get into the middle of this particular summer, I think people will be much more relieved and the stock should lift.
You know, we're looking at a market right now, given the tariffs that are going to come on that we're going to hear about on Wednesday. And it's hard to believe the market's going to rally over the next 2 days. My question to you is, do you look at this and say, that's opportunity in the AI world or some other world?
So, Andrew, for a select few, right, over the last couple of years, the AI infrastructure trade, which is focused on hardware and semiconductors, it has been a situation where we all know the tide has lifted all boats. And on the other hand, we've now started to fall. But there will be some key companies, not all of them, but some key companies that I would be positioned in. And I'm not really looking at the fundamentals now, Andrew, because I think they will come back. I've become a technical analyst, and I'm looking for signs of these stocks to trough before I either buy them or add to them.
Speak to the DeepSeek of it all, though, because one of the questions, we were just talking about this in the last hour, is this idea that if DeepSeek and some of these other open models effectively can take on the OpenAIs of the world, the Anthropics of the world, a lot of the folks who are spending extraordinary amounts of money, it may have an impact, by the way, on infrastructure and everything else, the energy and everything else that ultimately is required. And are we overbuilding?
So I know the CEO of NVIDIA, Jensen Huang, of course, everybody, when they're on air, are going to talk their book. He's no exception. He's essentially the cheerleader for AI. But I will tell you that I do believe his thesis, his philosophy, what he's telling the street and others, that when you lower the cost of the technology, via DeepSeek or other models from the China or in the United States, that you will build demand. And the next step of AI, which is inferencing, has voracious demand for infrastructure. And so I actually think in the long run, after we get through this turbulence, Andrew, that we will be in a better situation with a lot more demand for computing intensity than we had before.
Paul, we're going to leave the conversation there. We will see where all of this goes, and I'm sure we'll talk to you a lot more about it very, very soon. Thanks.
Goldman Sachs has raised concerns about the U.S. economy in advance of President Trump's announcement later this week of reciprocal tariffs. The lesson learned? Trump may end up freeing the inflation beast with his so-called Liberation Day package. On April 2nd, the president has promised to announce universal like-for-like tariffs. Countries have lobbied to avoid the worst, so it's unknown what the new tariff rates will be and who would be affected. However, Trump promised to impose substantial tariffs on U.S. trading partners last week. In a letter to clients on Monday, Jan Hatzius, chief economist at Goldman, predicted that the increased tariffs will raise consumer costs. By 5 percentage points, he increased his year-end prediction for core personal consumption expenditures, PCE, inflation, to 3.5% growth annually. Hatzius increased his tariff assumptions for the second time in less than a month, and the updated projection reflects this increase. Originally predicting a 5 percentage point increase, the economist now projects an average U.S. tariff rate increase of 15 percentage points this year. Hatsius has lowered his earlier projections by 0.5% and now projects the U.S. gross domestic product to reach 1% in 2025. Furthermore, he predicts a 35% possibility of a U.S. recession in the upcoming year, up from 20% earlier. According to Hatsius, the improvement over our earlier 20% estimate is a result of our lower growth baseline, the recent sharp decline in business and household confidence, and remarks made by White House officials suggesting a greater willingness to accept short-term economic weakness in order to advance their policies. We are less dismissive of the latest downturn since economic fundamentals are not as robust as they were in previous years, he continued, even if sentiment has been a poor indicator of activity over the past several years. With the possibility of trade partners retaliating against U.S. exports and the possible impact of higher charges on U.S. imports, markets are once again on edge as concerns about tariffs reverberate throughout corporate America. On Friday, the Dow Jones Industrial Average dropped 716 points, or roughly 1.7%. Simultaneously, the Nasdaq Composite fell 2.7%, and the S&P 500 fell almost 2%. The broad benchmark S&P 500 is headed for its worst quarter since September 2022 and has dropped 5% so far this year. A few of the targeted nations have responded right away. China announced a 10% duty on sorghum, soybeans, hog, cattle, seafood, fruits, vegetables, and dairy products, and a 15% tax on U.S. chicken, wheat, corn, and cotton products. A 25% tax on U.S. imports worth $30 billion Canadian dollars was announced by Canada. According to Gary Cohn, the current vice chair of IBM and a former director of the National Economic Council, last week, I would tell anyone who wants to understand what's going on in markets that markets thrive on predictability and they thrive on certainty. According to Cohn, ambiguity is a market's worst enemy. The market will penalize a company's stock if it introduces uncertainty into its earnings profile, growth profile, or business plan. When lawmakers and politicians generate uncertainty about how taxes, capital gains, and tariffs will operate, they are creating uncertainty for the market, which in turn affects pricing. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Let's talk about today, what's in front of us. This is the last trading day of the month. Kenny Polcari pointed out that, you usually have this end of quarter window dressing. He says right now it looks like window undressing. So what are you paying attention to as you kind of think about, I know, it's funny, as you think about, just how it's been very difficult for equities this month. The S&P 500 had dipped into correction territory. What are you looking at today when it comes to trading patterns?
Yeah, I mean, obviously, the trend is to the downside. We are going to be testing a really key trend line. If you look at the April lows of last year and you kind of run that up, that's pretty much the last primary trend line that we have to the upside if you're looking at a daily chart for now. And so if we open where we are right now, we would be breaking that trend line to the downside, unfortunately. But, I do believe, quarter ends can be very exciting. And it's not going to be so much for the mega cap names. And I think that's going to be the difference, or maybe the nuance that I would kind of call out compared to just calling it window dressing as a whole. If you look at the small caps today, those could be the ones that actually do see a lot of intraday volatility. Doesn't mean that it's going to go lower, doesn't mean it's going to go higher, but usually last hour and a half of the day, small cap companies that have exposure to the SMCI indexes, which do get rebalanced today, you tend to see actually some fireworks there and a healthy rotation. So maybe not so much mega cap names, but I'm looking for the small caps last hour and a half of the day to kind of, if we are going to get kind of this rip rally to the upside, the small caps are going to be the ones that tell us that that's going to happen.
Okay, so we may see some outperformance there and underperformance over in the Mag 7. But tell me what you're looking at for the levels on the S&P 500. We finished at, 55.80 on Friday. Where do we go from here?
Yeah, so to the downside, I'm looking at 54.10 to the downside, and then to the upside, 55.65, and that's actually the same level that this JP Morgan collar position really starts, the put side of that, and they are long that 55.65. When we open this morning, if we open below that level, that's where you could actually see additional selling pressure just because of positioning, because that position for that collar is actually expiring today. So that'll be an interesting one to kind of look at, but there's definitely a lot more downside action being priced into the options. And in fact, I screen a lot. I screen a lot when it comes to the SPX flows here, and I don't actually see anything on the call side hitting my screens today. That means that there are 0 calls that have at least been sold to open or bought to open that have cracked the 1,000 level when it comes to volume, and that's something that's fairly rare. That just speaks to the bearishness that we are seeing in the market right now.
Yeah, it certainly seems to be still bearish sentiment reigning as we cap a rough month for stocks. So the upside target, 55.65. I don't know how likely that is. 54.10 is the downside. Thanks.
A large portion of the hundreds of billions of dollars that big tech plans to spend this year will go toward building massive data centers that will support the sector's artificial intelligence initiatives. However, analysts told Yahoo Finance that President Trump's tariffs might increase those costs by driving up the cost of data center equipment and building materials made in targeted nations. According to CBRE, Trump's tariffs will increase commercial project building prices by 3% to 5% overall. Data centers' structural components, electrical systems, and cooling systems are made of steel, aluminum, and copper, products that Trump has targeted. The capacity of the big tech companies to develop AI data centers will be impacted by this, Matt Pearl, director of strategic technologies at CSIS, stated. As they race to expand out infrastructure, so-called big tech hyperscalers Amazon, Microsoft, Google, and Meta, which have data centers across the nation, some of which they own and others of which they lease, have announced that they will spend a total of $325 billion in 2025. However, Trump has added 10% tariffs to current charges on Chinese imports, and intends to put 25% tariffs on Canadian and Mexican imports on April 2nd, in addition to reciprocal tariffs on other U.S. trading partners, possibly including Taiwan. Trump announced this week that he will eventually impose an import tax on semiconductors made abroad, in addition to the country-specific taxes, but it is unclear what those penalties would include. In 2024, supply chain expert and Michigan State University professor Jason Miller collated U.S. trade data showing that the U.S. purchased over $33 billion worth of computer parts from Taiwan, including Nvidia's GPUs. According to U.S. trade data, the U.S. also imported $34 billion worth of commodities from China and $43 billion worth of computers, a data classification category that includes data center servers, from Mexico. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Kevin Green joins me for a look at some charts and an assessment here of the end of the quarter and into the end of this week with some decent data ahead of us. KG, firstly, what does the quarter end and the month end do for us today in terms of volatility? Anything unique there?
Yeah, we are going to see a little bit of volatility. Obviously, we're seeing it right now, right? I think there's a couple of things to just kind of be mindful of. Just because of the open that we are at this morning, we're below that 55.65 level, which is kind of that long put for that JP Morgan collar. So if we continue to kind of move to the downside here, we might also get some additional selling pressure kind of taking place for the market. And then you will also see potentially some rebalancing when it comes to passive flows towards the end of the session. We can kind of talk about that in a little bit later here. But what I'm kind of looking at for today, and it's still a very wide range when you're looking at these markets. And actually to the downside, I actually have 54.10 on the radar for the downside, which is obviously about 100 points away from where we are at right now. But that's really where the flows are kind of showing up. Also seeing some flows now sitting at around 54.50 to the downside. But if we do get a little bit of a retracement back up, 55.50 is going to be your first area. Next is 56.20. We are seeing some selling happening there when it comes to some calls, if you will. So obviously it's not a really good start start to the trading session. I would expect a little bit of a bounce here, a little bit of a counter trend bounce at the 5,500 level. If we do not get any type of bids at 5,500, that's when it becomes a little bit more concerning on the longer term time frame. If we kind of look at it, we're hitting the lower end of this channel that we've been following for a very long time here, which is once again aligning with that 5,500 level. You'd like to see some buyers really try to step in for the most part here. And if not, we do see some failure, Oliver, that's where we kind of start looking at a little bit longer to the downside. And that's going to be an unfortunate situation if that does take place. But you can make the case from a technical standpoint over the next couple of weeks or even months, and we might still see some downside pressure for the most part. Now, if we see the tariff policy start to firm itself here a little bit, and we kind of take out some of that uncertainty, that probably could put a little bit of a bid in equities or maybe kind of slow some of the selling. But for right now, we're still in this sell-off type of mode. We're not at capitulation as of yet. And I'm not sure what level we get down to in order to really see that. It could be 5,400, it could be 5,000, who knows? But for right now, the pressure is still to the downside. You're not really seeing anything catching bids outside of maybe some of the defensive sectors early on in the session.
Yeah, NASDAQ says it's going lower because the S&P holding on to those recent lows, but basically breaking them now. And the NASDAQ breaking below its recent lows from this month. Really ugly stuff, and absolutely just totally dead in big tech world. It's just astonishing. Tesla's down 7%, Nvidia down 4.5%. The other thing too is that it's less astonishing that a stock like Tesla is going to swing around this much, but it is more just a statement about how intense the selling is when you look at a company like Nvidia that trades just as expensive as the S&P 500 and now hasn't gone anywhere for a year, and they're finding selling in there. So it's pretty relentless in that category.
It is. NVIDIA, you can make a case that maybe the next buy area there is going to be around $95. 105 to 95 is kind of that range that I've looked at. But I mean, NVIDIA's been moving $4. Yeah, but NVIDIA's been moving $4, $5, even $6 on a daily basis. So that could be something that happens. For me, Oliver, Tesla just kind of has been on its own island for the last 3 years. So I wouldn't put too much stock into Tesla as a company right now. I mean, if they actually did not even have that much of a positive correlation with the S&P 500 over the last 2 years or so. It just started catching a bid on that election bounce, and obviously because of the market cap, it's going to have an influence on the S&P 500. But it usually kind of just does its own thing.
But you got to update that for since election. I mean, I'm looking at the correlation; it's been 0.7 or higher. I mean, an advent perhaps of the Trump 2.0 stuff, totally to your point. But since November, that thing has been just a beta version of the stock market. Where are we at last week? 10-day correlation of 1, down to 0.6 right now. KG, you got a small cap thing. I want to make sure we hear this because I thought this was pretty interesting. Tell me about the Russell.
Yeah, so we are at quarter end. And so you're going to see a lot of rebalancing taking place. And this is not so much of a focus on the large cap or mega cap stocks, which obviously could catch a little bit of a bid here. But usually at quarter end, you do see some small cap stocks actually catching a bid within the last hour to hour and a half because of that rebalancing. So that'll probably be your first tell. Now, it may not happen today, who knows? But March quarter end is one of actually the most volatile trading sessions that we will have all year. If you're just kind of looking at the quarterly basis here. It doesn't mean that the overall Russell has to go to the upside. I think Russell is just kind of just symbolizing small caps in general, but there probably will be some pretty decent winners in the small cap space today, or if they are oversold in the session, maybe catching a little bit of a bid. We have seen some wild things happen at quarter end. It also could result in a meltdown, but passive funds need to put money to work. They cannot just sell out and sit on the sidelines. They have to have exposure. That's kind of a part of these charters when you're looking at these passive index funds, no matter if they're ETFs or mutual funds. And so that's where you can kind of see a little bit of maybe some month-end action taking place here, Ali. And I just want to highlight just real quick. There's a last trend line that we have on the S&P 500 that is now being broken. And that's something to also be mindful of. It's that April low. If you go from the April low to the July low, make a line there. We were basically holding that. That's actually where we touched came back, kind of had this counter trend rally, and now we are touching and breaking through that one. That's not a good look, but we still have some more to go in the session. The next area that I would look at, though, after this break to the downside is going to be 5,400, which kind of aligns with some of the flows that we've been seeing on the put side here. And we're seeing a lot more put side flow in the market because of obviously the bearish nature of the environment. Then call side, at some point we will get on the wrong side of the, I won't say wrong side, but so many people will get bared up that you could probably see maybe a little bit of fracturing or maybe small pops throughout a whole overall downtrend. So keep your eye out on that trend line here. That was the last major one that we had on the radar before we really started testing some pretty key areas to the downside. And you're looking at 5,400 first area, and then below that around 5,150. So continue to stay tactical. That's what I keep telling people at this point.
I appreciate it. Thanks.
In other words, Mexico, China, and Taiwan are the main sources of data center equipment utilized to run facilities in the United States. Trump has not specified how much he will impose tariffs on Taiwanese imports. The construction of data centers also requires electrical components. According to Brendan Lynch, an analyst at Barclays, the supply chain has been limited for years in terms of obtaining the parts required to construct data centers and the infrastructure that supports them. The industry's expansion has been hampered, in particular, by electrical components like transformers. Since many of these components are imported, imposing tariffs would raise the cost of building a data center. However, he claimed that data center owners may just accept the tariffs in order to advance because they are so eager to expand their AI capabilities. They will undoubtedly pay more, Lynch added, adding that it will only have an impact on the project's yield for the data center developer, data center businesses whose facilities are leased and run by big tech hyperscalers, or increase the cost for the hyperscaler if they're doing it internally.